What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our Market Open live stream for CPI numbers coming out later today at 8:30 a.m. Eastern. So we are about 30 minutes away from inflation numbers coming out for the month of May, and these are the consensus. This is the expectations from the market. And of course, we have markets almost trading back up to near all-time highs. We are less than 2 to 3% away for both the S&P 500 and the NASDAQ as well. So hope you all are doing great. Pre-market, we do have QQQs slightly down about 12 basis points. We got SPY that is also down about 11 basis points. Tesla here rallying back up to over 2% higher, $332 after comments and tweets from Elon Musk regretting what he said about Donald Trump last week went a little too far. So apologizing a little bit, and we're seeing that bit of a positive comment from Elon Musk as well. I mean, so much back and forth is happening between these people. It is unbelievable. It's like, night and day. You're saying some things in one day, and then the complete opposite the other day. It's like a hot and cold relationship for these people with each other. But nonetheless, hope you all are doing great. We are getting ready for inflation numbers, so make sure that you drop a like and subscribe to the channel. And I also want to take this time to go over options trading. If you have any questions related to swing trading as well, more than happy to go over. I've got my options chain open over here. So if you want me to look into any specific trades, any kind of options trading ideas, I'm more than happy to do that as well. Because like I said, I've got my options trading over here opened for any stock that you want me to look into. Any stock, any ETF, I've got the options chain. We've got the chart. We've got everything. So any questions, more than happy to cover that for you. This was actually one of the recommendations from our members where we can do these live streams. I can answer questions. I can share my thought analysis and my overview on whatever it is that you're trading. I can share my insights as well. So it's just over 8 a.m. in New York, and less than 25 minutes away from the CPI numbers, from the inflation numbers that are going to be very, very important. So do me a favor, share this live stream with your friends, family, other traders and investors that can benefit from this as well, and we can have more and more people join us for the inflation print. So let's dive right into it. You guys ready for a 5% gap up today? Is what the real Mr. High Off Music says. Trump just tweeted. So we'll take a look at that as well. But there you go. We're getting a little bit of a rally. So QQQs, Tesla is up over 2.3. We got Nvidia just barely up. SPY is also flat. But let's see. Let me just do that very quickly. I think I've just moved it. Maximize pane. There we go. Okay, so QQQs are also essentially flat at the moment. Okay, thanks for your job, Mihail says. Thank you so much, Mihail. I've noticed you've been taking a lot of those technical analysis courses and tutorials, so congratulations, and I hope your education, your learning is going well. Again, if you have any questions, let me know. Palantir covered calls is what Sairam is asking, so more than happy to assist you with that as well. What I'm really going to need is an understanding on your cost basis and what your strategy is. Is it going to be primarily focused on income, or you want to let your shares run a little bit longer, or are you comfortable letting your shares go? Because that will really allow us to analyze it in different ways. And another thing with trading options is that you can always roll up and out, but it's a lot more difficult to roll in and down. And that's why we start small. We start with, let's say, a weekly expiration, and you can always manage options on the way up and out as opposed to the other way around. So I start usually with 1 week options. At max, I would go out to 30-day expirations, and then of course manage the position from there, depending on whether the market price has breached the strike price or not, i.e. whether the stock, of course, whether the option is in the money or not. So cost basis $14. Don't want to give up the shares. Income, okay, so $14 of course is an incredible cost basis, really, really cheap. You're up more than 1,000%, almost 1,000% on those shares. So you certainly don't want to give up those shares. So I'd be looking at starting it from June 20th. And you can look at strikes as much as, 150. It's not going to be a lot. It's only going to be 50 cents per contract. But then if you look at the delta you're working with a 0.09. So that's less than 10% probability for those contracts to expire in the money by next Friday. And you're getting around 54 cents per contract, which is going to be $54 for each contract that you are selling. Of course, you could go a little bit further out of the money, 160. Delta drops down to like 2%. Premiums also drop down to 13 cents. That's literally, peanuts. I mean, that's nothing. That's like $13, $25 per contract, which again is not substantial, but it is a small amount of income that you're able to generate while also having a very high probability of keeping your shares, because it's very unlikely that Palantir gets up to 150s or 160s by next Friday. Is it a possibility? Yes, but we trade on probabilities, right? Not on possibilities, because anything is possible, but we trade on probabilities. That's the most important thing. So I have 400 shares of Palantir and want to sell covered calls on them. So yes, I would look into the same exact ones that I'm just going over, 150, 160 strikes next Friday, if income is your priority and also you don't want to lose your shares. If you are okay letting your shares go, then of course you can roll down on these strikes, looking at 130s, 134, 135. Now you're talking 360 to as much as $4 per contract. And again, the delta is going to be significantly higher. So you're looking at 45, 43, 47% probability that expires in the money by next Friday. So that's almost as good as a coin flip. So you got to be very mindful of those things as well. Okay, let's see. How much cash ready should we be at the moment? I'm 30% cash is what Jamie's saying. So I'm 14% cash. That's what I mentioned in our Discord yesterday. I said that I'm 14% cash in the options portfolio. And I'm very comfortable at this position given that we are at overbought and overextended levels. Volatility's already come down quite a bit. It's now back under 17. And then if you come take a look at the MoneyVest index, we are sitting at over 3.74. So we are pretty optimistic right now. We've just been, cruising higher in this optimistic level for the last 7 to 10 days. Since May 28th, we've been over 3.5 and we've just been cruising higher slowly and steadily. So, we're at a point where the risk reward is obviously not great. It is something that we have to be mindful of, and I'm comfortable sitting at around 14 to 15% cash. And if we do get any kind of pullbacks or corrections, I would be ready at selling puts. Now that would have been deployed into TSLL. That would have been TSLL puts that I would have sold, right? But I was not able to do that. As I mentioned in the market updates, I was not able to sell puts on TSLL. It dropped down to 950 when I looked at it after I landed. So I was in midair. The Wi-Fi got cut off. I was not able to trade or send out any alerts. So by the time I landed, it was already at well over $11 per share. So I'd missed out on a very sweet entry in the 950s. Would have sold puts at $8 or $7 per strike prices. Would have collected just over $400, $500. And by now, these contracts are worthless. They're literally worthless. I looked at them. If you come over to the options chain for TSLL, you'll notice that same this Friday was the expiration I was looking at. $8 puts are going for 1 penny. Literally 1 penny. $9 strikes are going for 3 cents. So they're almost worthless at this point. But hey, what can you do? It's bound to happen at some point. If you're going to be traveling, you're on the go, and if you are trading on the go from your phone or whatever, it's bound to happen. Poor network, lack of availability of the data, connection issues, all those things are just part of the game that you have to accept and then just move on. But that's okay. I mean, this obviously, and that's the beauty, right? So you get a little bit frustrated. That's how I was feeling by the time I landed. I was like, man, I missed out this trade. But then do I go out and chase it? Do I then sell puts, or do I then start buying at those levels? No, because that's when you get into trouble. Once the risk reward has shifted, once I have missed my entry, then I am just going to sit back and wait for the next possible opportunity there. I'm not going to go ahead and start chasing something that I've already missed, because that's when you start getting into trouble. And that's when, next thing you know, if you're underwater, then you start revenge trading and you create all kinds of problems for yourself. So it's really important to stick with the plan. And if it's not opportunity A, then there's plenty of other opportunities in the market to take advantage of. Okay, so coming over to a few other comments here. So put Palantir in the dirt. Tell me your thoughts on TSLL leap calls. So, we've got a leap calculator as well. So what you can do is, I'm actually going to be putting this on our Patreon. I think we already have it. I just have to double check where it is. But we've got a leap calculator that allows you to put in a lot of these values and then figure out whether it makes sense, whether it actually makes sense mathematically to buy leaps on that particular stock or ETF. So we want the cost of the leap to be less than 60% of the cost of buying 100 shares of that set stock or ETF. If it's more than 60%, then you're kind of better off just buying the stock itself, because you're paying very close to the actual market price. Now, of course, it could be 65%, 70%. Some people would say it's still better. You're paying 70% of the cost of the total 100 shares. But then that also plays into the role of extrinsic value and how much you need to generate in terms of return on that additional capital that you're saving. So, that's the leap calculator. You can put in a lot of values there, whether it's a stock or an ETF, to then figure out whether it makes sense to take on that leap or not. Because in a lot of cases, not every stock is worthy of a leap. Some stocks are just worthy of buying the stock straight up instead of going the leap route. The leap works best if the cost is less than 60% and the extrinsic value as a percentage of the premium is less than 4 to 5%. So there's a lot of intrinsic value in that options contract. And again, that's discussed in the leap tutorial in our options trading course as well. So, did Etsy finally run out of short squeeze steam? Let's take a quick look on Etsy. I haven't covered that in such a long time. Wow. What an incredible rally here for Etsy, from $46 up to as much as $64, $65, trading at just under $60 now. But this right here seems to be a very strong resistance for Etsy at the moment. So it looks like we have gotten rejected there, not to mention it's incredibly overbought and stretched on one direction. So it was only a matter of when there was going to be a bit of a pullback for this stock. And support level now is going to stay put at $57 for Etsy. Okay. Yes, make sure that you drop a like, everyone, subscribe to the channel, and also share this live stream with other friends, family, traders, investors, so we can have more people join us. Again, the inflation numbers are coming out in 15 minutes. So 15 minutes, we've got the CPI numbers coming out, and also do participate in the poll, which is asking you what's going to happen with the markets after the CPI numbers come out. Are we going to see a rally or a crash? So definitely participate. As we can get a nicer data set and, of course, an overall understanding of what everyone is expecting after the CPI. Data stocks. Tell me your thoughts on hedging portfolios with more stocks. I saw the WHO said Mpox is a big issue again, so I bought GOVX, VRAX, APDN, and COSM. They all ran in August when WHO was yapping about Mpox. So thank you for subbing on 5 different accounts. I really appreciate that. And yeah, I mean, those are mostly going to be on trading on momentum and the overall trend. If there is any kind of issue, health-related concerns, then I'm sure a lot of these names that you just mentioned have the potential to have some kind of short-term rally, but you just got to be mindful that this is only a momentum trade, and you're managing your risk well, because they can be incredibly volatile based on what's coming out from WHO or just government official websites. So as long as you understand that this is strictly trading purely based on momentum, taking advantage of an ongoing trend, then I think you are on the right plan while also managing risk. But if you treat them as long-term investments, then of course that's when the miscalculation comes in. For long-term investments, you just want to make sure that you're not too dependent on what's going on the macro, but really just focused a lot on the micro, which is the company-specific fundamentals and revenues, and whether the company has an actual moat, a defensible moat that nobody can penetrate, very strong growth projections, very strong margins, and balance sheets, some of the things that are really important for us that we look at for long-term opportunities. So that's going to be, those are going to be my thoughts there. Let's see. Any plan on SoFi covered calls? Any suggestions, which is good? So yes, SoFi covered calls, I did close out. I'm actually planning on selling new ones. I might look into like $15 or $15.50. So if I come over to SoFi over here, okay, let me just do this and this again. All right. So coming over to SoFi, options chain for calls for, let's say, next Friday If I go out to 15, that's going to be paying 25 cents. So it's going to be a good $300 because I do have around 1,200 shares. If I go out to $16, that's 8 cents. So I might look at 15, but 15 might be a little bit too close since it's already at 14.40. $15 is going to be, just about a 4.7, a little bit under 5% rally for SoFi. And what we're also, what we also like to focus on when we're trading options, when we're selling options, is looking at the median weekly move for any stock to better understand that the strike price that I'm choosing is outside of that range. For example, I haven't calculated this yet, but let's say, for example, the SoFi's weekly move on average or on median is around 6 to 7%. So if 6 to 7% is on median is what SoFi moves on a weekly basis, I want to pick a strike that is at least 7% away, if not more. So now I'm looking at 15.50 as a potential strike. 15.50 is going to be 14 cents per contract, and that's something that I can go for. The delta for this one is going to be just under 21% probability that that's going to expire in the money. $16 is going to be 13, but that of course is going to be lower premiums, 8 cents per contract. So I'd be looking at 15.50 or higher for SoFi calls if I am going to be selling some for next Friday. Now, for the remainder of the cash, I'm looking at TSLL puts, I'm looking at buy rights, I'm looking at Nvidia buy rights, I'm looking at rounding up my position on Nvidia close to 1,000 shares, and of course selling some calls on that as well, especially when you consider that Nvidia is extremely overbought right now. So RSI, MACD, as well as the price itself, trading at a resistance at 144. So let's take a look at what Nvidia is paying 150 calls for next Friday. So 150 calls for next Friday for Nvidia are going for, let's just come all the way down here. They're going for $1.09. And the delta is around 23. So 0.23 is where we are. If I go up to 160, now we're looking at 13 cents, really low. 155 is going to be 37 cents for Nvidia. So it's okay. It's okay. Not too good, but it's decent. It's also not great. So it's kind of somewhere in the middle. Sell SOXL, bought at $9, Tushar Sarup. So yes, SOXL has been one of our trades, right? So it's done really well. I know people that have more than doubled their money in SOXL. We've got a few of our members. Shout out to Evie. Shout out to even my brother, who's up over 100% on this. So the thing about SOXL is that U.S.-China trade negotiations are moving in the right direction. The U.S. is now easing on their export restrictions on China, which is good news for semis. Semis in general have been rallying quite a bit over the last few days. I mean, if you come take a look at SMH, SMH is up very nicely. Year to date, the stock is up over 7%. So you've got S&P 500 that's barely up. The NASDAQ is barely up, but semis are actually green by over 7%. So semiconductors are indeed doing really well. However, on a technical basis, we have now hit the upper limit where we're getting up to those overbought levels where RSI, MACD, L3 banker oscillator, everything is kind of at that peak point with the price itself trading at a resistance. So a short-term pullback, some kind of correction is possible. But as you guys already know, that I'm very bullish on semiconductors over the long term anyway. But I also don't personally recommend myself to hold leveraged ETFs for the long term. So SOXL is always seen as a bit of a trading product. SMH is more of a long-term investing opportunity because I am bullish on semis for the long term, but leverage can really be detrimental to your growth if there is a negative move, if there's a correction, if there's a big crash, then yes, SOXL can really wipe out a lot of those gains or those opportunities. So that's why SOXL is strictly for trading. SMH is more for long-term investing. So for SMH, I do expect some kind of a pullback given the technical overbought conditions and the fact that we're approaching some kind of resistance. It may still have a little bit more upside because SMH 268, 269 is going to be that target, and SOXL can really push up to as much as, I would say, $24. So that would be the target that I would put down on SOXL next, $23.85 to $24. But expect some kind of a pullback or correction in semis in general, given how much they've already rallied. So yes, it would make sense a little bit to take some profits off the table. Okay, so we are less than 8 minutes away from the inflation numbers coming out.
Once you have that, we have shown that the more people you have, the more power you can ask questions about how our genes determine the most important drugs in the world have been predicted exactly like Dupixent, our genetics.
So, very quickly giving you an update on what the expectations are. These are the consensus for CPI. So, Srinivas, I was literally about to just go over that. 0.2% is the consensus for CPI month over month. Year over year, which is headline CPI, we're expecting a 2.5%, which is going to be a bit of an increase from the previous numbers. So, if you come over to the BLS website, you go over to subjects, consumer price index, then we go over to charts, and we simply plug in the number for the last 20 years on this map. You can see that we've been trending lower, which is a good sign from the peak of June 22, 9.1%. We traded down to 3%, and slowly and steadily we're making our way lower. 2.3% was the April number. This month, this report, we're expected to see a bit of an uptick to 2.5. And then if you look at core CPI, it's also been trending lower, which is good news. 2.8% was the number previously. Markets pricing in are expecting for 2.9%. So on both accounts, markets are expecting some kind of an uptick in inflation. So that should be interesting to see whether we're going to get some or not, because tariffs are also going to be playing some impact on inflation, right? Because we did see some tariffs that were already implemented for the reports that we're just getting, right? So April they were announced. May there was a lot of tariffs in place until the pause were announced. So that's why the trade volumes did go down. We were not seeing as much trade happening between these countries, and as a result, when there is supply constraints and if there is equivalent demand or higher, then prices start to go up. Just basic supply-demand dynamics. So we'll see if that actually did play a role in inflation for this report. So hope you all are ready. This is it. This is the inflation report that comes out every month, which the Federal Reserve watches and focuses on very, very carefully. We also do have, of course, the FOMC meeting next week. So that's going to take place on June 18th. So right now, the markets are very, very optimistic that the Federal Reserve is not going to do anything. It's literally in 7 days. So next Wednesday is when the meeting takes place, and there is almost 100% probability now that the rates are going to stay where they are at 4.25% and 4.5%. So let me know in the comments what your expectations are for inflation that's coming out in less than 5 minutes. What are you thinking for inflation? Is it going to be higher, lower than previous numbers, or compared to, of course, the expectations? And of course, do participate in the poll, letting us know where you think the markets are headed after the CPI numbers come out. So share this with your friends, family, other traders and investors so that they can join us, and we can take a look at those CPI numbers together. I remember when someone told we get 4 rate cuts this year. Now we're down to 1. Yes, I know. So just fewer and fewer rate cuts this year, right? So as I mentioned in my previous updates, that last year I do strongly believe the Federal Reserve jumped the gun too early. 100 basis points, 4 rate cuts was not necessary at all. And as I've mentioned this many times before, that on the way up, let's see who remembers this. We've talked about this on the channel many times. Let's see who remember this. On the way up, the Fed, in my opinion, needs to be blank. And then on the way down, the Federal Reserve needs to be blank. Let's see who can get this pop quiz answer. Comment in the chat if you know exactly what I'm talking about. I mentioned this in the chat on the channel before in my videos, that on the way up, in my opinion, the Federal Reserve needs to be blank. And on the way down, and we're talking about rates, we're talking about interest rates. On the way up for interest rates, the Federal Reserve needs to be blank. And on the way down, the Federal Reserve needs to be blank. Because both of them, yes, proactive and reactive. Correct. So on the way up, they need to be more proactive because they need to really assess the inflation situation, because inflation in general has been a bigger problem for the Federal Reserve and for the economy than a recession, because it's much more difficult and more challenging and more time consuming and more detrimental to raise rates than it is to lower rates. Lower rates can be done in a snap of a finger. It can be done overnight to try to support the economy if it needs to. But on the way up, it takes a lot of time to kill inflation. So they need to be very proactive on the way up. They can be more reactive on the way down. So slapped on the way down, whooped. Okay, so very, very close to the numbers coming out. Less than 3 minutes. There you go. And so we are ready for these inflation numbers.
Look, I remember taking the polio vaccine in school.
Okay, we're going to open up bls.gov in another tab just to make sure. And we are good to go. We're good to go in about 2 minutes here. 2 minutes, we're going to get the CPI report right here. So let's do this. June 11th, 2025, 8:30 a.m. Eastern. This is it, folks. This is it. We'll see what the Federal Reserve says about this report in the next meeting. It's going to be exactly in 1 week. So next Wednesday is when the FOMC meets again. And we're going to get the interest rate decision, which is most likely going to be keeping rates where they are. We'll see how the markets react to this inflation print. If there's any kind of reacceleration, if we do see inflation moving in the wrong direction, moving higher, then the Federal Reserve's plans could indeed change for the rest of the year as well. They could decide to keep rates where they are, and no rate cuts is also a possibility in 2025. So let's go. 1 more minute left. We got over 800 people watching, so make sure that you drop a like, subscribe if you haven't already. If you want to join our Discord, our MoneyVest family, our community, link's going to be down below. You get all the real-time alerts, access to all the members-only videos, portfolio updates, MoneyVest website. Everything is going to be available. So more than happy to have you on board and, of course, help you in your journey of trading and investing as well. Why Nvidia stock isn't going up last time where it went to $1,000. So yeah, it's been a bit of a slow mover, right? It's been moving slowly over the last few days. Okay, we're ready. We're about 20 seconds away from the brand new CPI numbers, inflation numbers. So, gonna reload this page as soon as 8:30 a.m. hits, and we should be good to go in about a couple seconds here. I've got the QQQs and, of course, a SPY over here. There we go. As soon as the numbers come out, I will be ready for that report. Let's see if it's already here. All right, so there we go. May 0.1% lower than what the expectations were. We're sitting at 2.8% for core, and headline did indeed increase to 2.4%. 2.4% is where we are for all items CPI for the month of May 2025. Core sitting exactly at 2.8. So that is actually better than what the expectations were, primarily because markets were a little bit too pessimistic about inflation going into this print, but we came in slightly better because core, instead of 2.9, came in at 2.8, and headline, instead of 2.5, came in at 2.4. So both accounts was a little bit better. Now there is or might be some concern. There's silver lining versus a little bit more of a concern as well, because all items did indeed tick up. That's the bottom line, that it did increase to 2.4% from 2.3. So that is something that people might read into, but core stayed flat. And we also month over month came in less of an increase than what the expectations were. However, all items less food and energy month over month was basically flat here, 0.0%, and all items was up 0.1%. So all in all, this is actually a very, very bullish print, because on all four accounts, we're actually seeing a strong beat across the board on inflation. Core CPI month over month, headline CPI month over month, and both core and headline year over year also coming in with a strong beat on inflation. Tesla at 336, up over 3%. Nvidia almost at 145. SPY's rallying here, another 30 basis points. We got QQQs also up over 50 basis points as well. Volatility is just a little bit under 17, with SOXL now hitting well over $22 per share right now, and Bitcoin also trading at just shy of $110,000. So all in all, strong report across the board. And biggest declines coming in from energy once again. We got crude oil and energy commodities and gasoline and fuel oil all declining month over month, with new vehicle prices, used car prices, apparel, even transportation services were down 0.2% on a month over month basis. So pretty strong report, much better than what the markets were expecting for this print. So let's see if it's already, there we go. So 0.1% is on the actual, month over month, 2.4 versus 2.5 on headline year over year. Month over month core sitting at 0.1%. So this one actually in the report, it said 0.1 or 0.0. Oh yeah, 0.1%. Okay, I was looking at the wrong row there. Commodities less food and energy was basically flat, but all items less food and energy month over month, so core CPI month over month at 0.1% increase, and 2.8% is the year-over-year number, which is same as the prior number, and also lower than what the expectations were.
He's 7 on the core. It's never been higher. We see that the pre-opening equities, well, they have improved rather markedly. We now see green, and interest rates have dropped dramatically. We're hovering just a whisker under 4.5% in the 10-year. We're now at 4.44%. So definitely the cooler than expected monthly numbers once again are going to create that wonderful weekend armchair quarterback scenario of trying to look at the outlying months over the next 3 and 6 months and trying to discover what they may be using the current monthly estimates. Now, I'm not saying that's a bad thing to do, and inflation certainly looks like it is cooling a bit, but as the year-over-year numbers do tell us, Joe and the gang, we're still a little bit on the high side with a 2% target. I'm interested to see if anybody at CNBC today talks about the notion that the Bureau of Labor Statistics isn't doing an adequate job of polling for CPI due to freezing of hiring or maybe even cutbacks due to the current administration. My one question would be, what was their enrollment and what was their rank and staff prior to COVID? Let's see what the comparison is. Joe, back to you.
And why would fewer people wouldn't necessarily give you cooler numbers? It could just be a higher margin for error. So, you know, I'll tell you, Rick, the people that we've been having on, even though they think next month will be even more telling about tariffs, but a lot of them were looking for something. We just had Michelle Girard on. She's been looking at something worse every month. Once again, it didn't happen.
Are you hinting that those 9 Democratic senators trying to have this looked into at the Bureau of Labor Statistics have political motivations?
Rick,
are you even hinting that?
No, but Rick, 3%. People said we'll go back to 3, and it didn't. It stayed at 2.8.
All right, so Nvidia, folks, almost at 145. 145 is where we're at almost for Nvidia, with Tesla here trading up to 336. Got S&P, QQQs, SOXL obviously having a massive spike here. That green candle just going crazy, up another 3% right now. And volatility is actually hitting its lowest level since February. So VIX just printed 1639 right now, which is, again, the lowest level since we've seen for the VIX since February of this year. So these are like, low levels on the VIX reading. I mean, we're kind of hovering around these levels before we got that massive spike in volatility, getting up to 30, then dropping back down to 17s, and of course a massive spike here up to as much as 60 for volatility. So my guess is the MoneyVest Index after trading day today, after what happens, is going to most likely be looking at trading around 3.75 or even higher. So 3.77, 3.78, closer to 3.8 is where we're going to end up for the MoneyVest Index as well. So there we go. Congratulations, everyone. Nice start to the day on inflation here, as QQQ doesn't seem to be stopping. And Nvidia just crossed over $145. So we are now officially up almost 1% on the day here. So which trading platform do you trade? So there's a lot of them to choose from. We've got a broker list on our Discord you can refer to as well. That goes over based on your location, based on where you're at. A lot of our members have shared the brokers that they use. These are not endorsements or any way, but these are just members recommendations, best platforms that we are using as a community, depending on where we're located. So Interactive Brokers is good. Charles Schwab, Fidelity, Webull, Robinhood. I mean, there's just so many to choose from. So Vanguard is one. Questrade, if you're in Canada. Just too many, right? Too many to choose from that you can look into, right? Depending on your needs and where you're located. So would now be a good time to take profit on Visa. So it really just, depends whether that was a swing trade or is a long-term investment, right? So if it's a swing trade, I mean, we're trading at an all-time high. We're also coming up to overbought levels. So yes, it makes sense why you want to take some profits off the table and let some shares run. But if this is a long-term play, then, Visa is one of the best, strongest companies in the world. It's kind of eyeing for its $1 trillion market cap. And, we talked about Broadcom last year when we mentioned the channel where Broadcom is going to be the next $1 trillion company. And eventually it became over $1 trillion business, right? So it's now sitting at 1.15. Now I do believe Visa is on its path to becoming a $1 trillion company. It's going to take time, but it's not that far off. From 720 billion to 1 trillion is going to be the path for Visa to getting up there. And quite frankly, it deserves to be because it's it's one of the biggest companies in the world in terms of its market share. It's got over 3 billion cards, debit cards, credit cards in the world issued by Visa, and the margins are just stupid. I mean, 47 to 50% net profit margins is just insane. Of course, Visa and MasterCard have been under a lot of pressure from anti-monopoly practices and all those things, but I like Visa for long term. ASML also a very strong competitor in, of course, the chip space, lithography equipments, and bottom line is I love ASML. I believe it's part of our shopping list as well, and I've traded ASML. I've invested in ASML in the past. And bottom line is that I do like it long-term a lot. SoFi is long-term. Yes, for me, SoFi is long-term. And let's come back to our poll. Oh, man, I should have done that earlier because now I feel that you guys would change your response. So let's see. There we go. 69% were expecting a rally. So that's good. That's good to see. And 31% expecting a crash for the market. But right now, where we have is Nvidia is trading well above 145. Tesla just under 336. We got QQQs, SPY, both pushing higher 40 to 50 basis points right now, with volatility is in the low 16s right now. Bought ASML today. That's great. So Jeff Brady says, so I knew it'd be lower. Too late. Powell needs to cut. So there still isn't any kind of emergency situation for Powell to cut rates. I think that's where I somewhat disagree. If you believe that Powell needs to cut rates right now, I would disagree with you because there isn't anything that they're trying to fix. One of the things that you also have to understand is that at the end of the day, this is a monetary policy tool. Right? It is a tool. And what do we use tools for? If we have tools in our house, we use them to fix something, right? We use them to fix something that is broken, right? At the end of the day, that's what the Federal Reserve controls. It controls the interest rates, which is a tool. It's a monetary policy tool. And there has to be an incentive for the Federal Reserve to use that tool. And that incentive is always if something breaks. But nothing really has broken yet. I mean, the economy is strong, right? So we've looked at the recession indicators. We've looked at where initial jobless claims are. We've looked at where unemployment rate is. We've looked at the state of the economy. And then we're looking at inflation as well. There isn't anything that's kind of like screaming danger right now. Had it been the other way around, where interest rates were extremely low, at near 0%, then the approach would have been different, where the Federal Reserve, in my opinion at least, needs to be more proactive. They need to be a few steps ahead of the curve to make sure that, okay, they don't drop the ball on inflation. They want to make sure that inflation is contained. It doesn't get out of control. But it's too late for that because Jerome Powell and the Federal Reserve already called inflation transitory back in 2021, 2022, and of course, we got into this whole mess. But on the way down, they can be a little bit more reactionary where, if a week from now or a month from now, things turn for the worse, if unemployment starts to go up and we see a million initial claims, God forbid it doesn't happen, but if it does, the Federal Reserve can drop interest rates at a drop of a hat. They can drop them down to, let's say, 1%, 2%, and like, boom, you're now stimulating the economy. You've got cheap money floating around everywhere. That's going to be a quick fix. So nothing right now screams interest rate cuts at the moment. And as we've discussed, like on the way up, yes, sure, they can be more proactive, but on the way down, they can be more reactive and allow for the economy to continue to function until something breaks, and then they can step in to fix it. So, Walt, Caddy, I wanted to address your response to one of the comments you received under today's market summary video. Your response was that we do not shoot lasers from our eyes when driving cars, but you repeated after Elon Musk, and this is his argument because he uses vision-based systems, and since we do not have lasers in our eyes, we make mistakes, especially in bad conditions. So, Walt, yes, I do understand what you're saying because of relying on vision. Bright sunlight, blinding drivers. Tesla had an accident in these conditions. So I wouldn't call that, all those things as vision issues. I would call them more as human error. Because if you look at majority of the number one reason for why there's accidents on the road is not because of a lack of eyesight or lack of just blinding the sun, whatever. It's distraction. It's distraction, and it is lack of awareness. Drivers being distracted, right? Either on the phone or looking at something else, and they're just not attentive enough to avoid whatever it is they need to avoid an accident. So while I do, agree that, okay, LiDAR, radar systems would have been maybe more efficient or would have been something that could have complemented an already existing vision-based system. I just feel that, we've been driving with our eyes, with our vision for the longest time. And if you can remove human error and still have a vision-based system, which is what Elon Musk and Tesla are trying to do, and then you have that everywhere in the world, then you significantly reduce the human error and, of course, the possibility of accidents. So that was what I was trying to get across, where we don't use LiDAR, radars to drive our cars every day. We use vision, right? And that's what Tesla and Elon Musk are trying to build. But with cameras and with AI, what they're going to do is they're going to eliminate all human error, all distracted driving, all lack of, awareness, because those cars are going to be able to drive 24/7 around the clock without losing any awareness. They're going to be attentive, and there's going to be zero human error because there's no humans. So with those is what I was getting at. And of course, LiDAR, radar is extremely expensive at the moment as opposed to vision-based. So we'll see. I mean, how this ends up, over the long term, and what kind of revenues we can expect from Tesla with these service, because it is going to, at the end of the day, unlock a huge revenue stream if it is successful. If it's successful, I mean, we're talking a ton of revenue. It could even surpass the revenue generated from the sale of electric vehicles, because it has to be done in quantity, right? It's a volume game. A lot of rides. I think Waymo is doing like over 100,000 rides per week, which is significant. And so these are also going to be higher margin, right? So we do not have echolocation or other sensors that could help with road awareness. Musk wants to rely on vision, which is flawed by design. Bright sunlight, nighttime, rain, vision in these conditions will have problems. Yes, I do agree. And that's what they have to solve for. That's exactly what they have to solve for. So it's not going to be perfect, but they have to solve for foggy weather, smog, rain, sunlight. I mean, so many different conditions, right? Because if it's going to be implemented 10 years down the road, if there's going to be unsupervised full self-driving camera-based vision system everywhere in every street of the world, then yes, it has to cater to every single condition. And that's the tough part. That's the challenging part. But the thing about technology is that once it ramps up very quickly on the data that it's collecting. So yeah, I mean, it's going to be an interesting project that we're going to be able to see once Tesla finally rolls out the unsupervised FSD starting June 28th now. So I'm excited. And if successful, like I said, this is going to be a game changer for Tesla's story because it's now no longer going to be a company that just sells cars. It's going to be a company that also has a huge high margin service, which is going to be robotaxis. So, but yeah, I mean, LiDAR, radar, we've had this discussion with Waymo, extremely expensive. So that's another thing, right? I mean, Tesla's playing a different game. It's not just relying on rideshare, but it also wants to do it at scale, and it also wants to give people the opportunity to run this for themselves. So it's not like Tesla operating as a rideshare company, but it's selling those robotaxis to people that are going to be using them for personal and commercial use. Personal, it's going to drive them around. The car is going to drive them around. Plus also, it's going to generate revenue for them. Whereas Waymo is playing a different game. It's strictly a rideshare business where Google, parent company Alphabet, owns all the cars, and they're the ones running the service. Okay, so Donald Trump did tweet, our deal with China is done, subject to final approval with President Xi and me. Full magnets and any necessary rare earths will be supplied upfront by China. Likewise, we will provide to China what was agreed to, including Chinese students using our colleges and universities, which has always been good with me. We are getting a total of 55% tariffs. China is getting 10%. Relationship is excellent. Thank you for your attention to this matter, is what Donald Trump also tweeted, I think, about 15, 20, 30 minutes ago here. So Trend Analytics, cash ready, another rally missed. Your thoughts? So depends how much cash you're sitting on, man. Really depends on how much cash you're sitting on. I'm on 14% cash right now, so I'm comfortable with that. Prepared. I've mentioned this in the Discord, where cash ready simply means being prepared with whatever percentage you're comfortable with. And for me, that number's been depending on where we are in volatility in the MoneyVest index, the market conditions, technical levels, market breadth. So we look at a lot of range of technical indicators to then judge for ourselves what cash percentage is good for everyone. And so for me, it's 14%. 14% cash. And that would have also been deployed yesterday, but as I mentioned in the market updates, I missed out because of traveling and being literally in the plane and just my Wi-Fi getting cut off before landing. But right now, 14% cash is where I'm at. Totally comfortable with that. And some people might be at 20%. I know a few members that are at 30%. Some are at 5%. So it really just depends on what you're comfortable with as a cash position. So Waymo is likely to offer their software to other automakers as well. So John, another thing that you have to understand is that this is an expensive project when you're using LiDAR, radar, geofencing, as well as teleoperations from somebody behind the scenes. All of that is very expensive to do. So margins are not going to be as high as something as what Tesla might be building, which is completely unsupervised, camera-based vision, right? So as we've talked about Waymo's financials, because it's got the backing of Alphabet and Google, it has a lot of runway, right? It has a lot of runway in front of it, until it becomes profitable and until it can be scalable. But for Tesla, it's a whole different ball game. So, often this comparison happens between autonomous vehicles and autonomous driving, but both of these companies are playing a very different game. They're playing a very different game because they're catering to different types of customers, and they're catering to customers with different kinds of technology altogether. So we really can't compare apples to apples in this case because of the differences that these two companies have in both their application deployment as well as the target audience. CPI data was really, really good. Josh, we came in strong on all four accounts. So this right here was the numbers for CPI. So beats on everything, month over month and year over year on headline and core. So markets did rip a little bit here, although pulling back slightly, but Nvidia is still closer to 145. We got Tesla here just under 335, up over 2.7. And both QQQ and SPY also doing really well. So John, what about the regulatory approvals Tesla needs from a Trump admin? That's why Elon Musk apologized, right? That's why he said that I regret saying what I said last week. It went too far. But I don't know what these guys are doing. I mean, there's just a hot and cold relationship with each other. Yeah, another problem with Tesla is that they do not disclose what teleoperations they are going to have for robotaxi, and they have to have these teleoperations. Yeah, I think it's really just a state of paranoid situation to try to make sure that when they are first getting started, they're launching something brand new, that they are making sure that all the safety measures are in place. I think as the confidence develops and as the company completes more and more rides, eventually it's going to taper off, where right now you may have one operator per vehicle, making sure that everything is working smoothly and they can intervene if necessary. But then you can have one operator over time, as they become more confident, one operator managing 2 vehicles, 4 vehicles, 8 vehicles, 10 vehicles, and then eventually 20, 50 vehicles at the same time. And then you've got no intervention from anyone, from no humans, right? So you can pretty much get it done all through technology, all through AI. So in the beginning, it's really just making sure that, okay, we get this, rolled out, we complete a few trips successfully, and then we build our confidence from there. So it's going to be a slow and steady start, but it ramps up very quickly. That's the piece about technology, is that it starts slow, but then it ramps up very quickly if the proof of concept is valid and it's successful. So sort of, will you be surprised if the market takes a U-turn now? Everything has been said and done. Even Trump has tweeted. Yeah, I mean, we've kind of approached this normalcy in the market, right? I mean, that's been the case for the last few days. U.S.-China trade negotiations have been happening in London this past few days. The only exciting stuff was the Musk and Trump escalation of their relationship. But other than that, I think inflation numbers are strong. The market's pricing in for a rate pause. GDP's coming in pretty solid. Earnings are out of the way. Trade negotiations are moving the right direction. Trump also tweeted confirming the approval of these trade deals. So, yeah, I mean, there's not much for us to go over at the moment. So I wouldn't be surprised if the market does take a U-turn. Yeah, simultaneous lane merging needs centralized supervision. It does, because if you've got, well, then what they're gonna do is, like, okay, if there's 2 cars simultaneously merging into one lane, I think the camera needs to then recognize who is slightly in front, gets the way right away. But if they're both aligned together, then obviously it has to decide which one to let go and which one to pull back. There's a lot of nuances with this, right? There's a lot of situations. There's a lot of very, very important, subtle, small situations that when we are driving, we recognize, but we don't yet know how the camera or the AI is going to handle that. I've seen a lot of videos of these AI drivers. I've seen a lot of videos of Tesla FSD just driving the roads of California, Chicago, like a lot of these, like there's a lot of YouTube channels that drive with a Tesla FSD and they just let it drive. Over time, you've seen a lot less interventions, less disengagements. So it's gotten better significantly. But there is still a few times when you need to intervene in order to avoid any kind of problems. So it's going to be, I'm excited to see how Tesla handles it and what ends up happening long term with unsupervised FSD. But like I said in my other video as well, it's all about first impressions. Am I right? It's all about setting the tone. Because if people are going to be literally trusting their life with this, they need to feel confident and they need to feel like it's just getting on a plane. That's what it should feel like, where there is no margin of error, right? There is none, because it's one of those things where you either get it right or you don't get it at all. It's just like literally learning how to fly a plane. You have to get it right. If you don't, that's it. So it's very important. And even, I believe, the first impressions of the plane weren't great either, but over time it got safer and safer to a point where now it's one of the safest mode of transportation. So that's what the goal is with unsupervised FSD. All right, so in terms of quick technicals on Tesla, and somebody's asking me about SOXL as well. I mentioned this earlier. I'm bullish on semiconductors long term, but SOXL was mostly a trade. And so resistance right now, or my target on SOXL, is going to be closer to $24. So that's what I'm really watching for SOXL. Tesla, on the other hand, pushing higher. This will be turned into a support right now, since we are breaking above 326, 327. So that's very good to see. And the next target is going to be at 360. So 360, 361 is going to be that next level to watch. Hot air balloons before planes. Can you even travel with hot air balloons? I've never been in a hot air balloon yet, ever. So I'm curious if you can even travel and what distances, or I feel like that has to be a joke. I don't think you can travel far with hot air balloons. The only hot air balloons I want to get on is the one that you see in Turkey. Those seem pretty cool. But thank you for your coverage and your ever thoughtful assessment of the market. Much appreciated. Thank you so much. Yes, you can cover miles and miles in a hot air balloon. I've done it. Really? I feel like you were just joking around. Then someone go all the way around in the world in a hot air balloon. No. You guys are playing. All of you. Come to Sydney, however, you should experience the hot air balloon. Weather in Dubai is really hot. It's scorching hot. It's very, very hot. So I think that was a book. What happened to GTLB? Do you think Tesla will dip since the event got pushed farther away? I don't think it will, because like I said, it's a question of when it's going to happen. It's not a question of if it's going to happen. It's not like we're still on the fence that, whether we should do this or not. It's just a question of when are we planning on doing this. So how far? I want to really look it up because I'm curious. What happened to Gemini? Why isn't that loading up here? Long flights are perfectly possible as long as you have the fuel for it. Interesting. Okay. You have to find a place where there's consistent wind. The balloon will fly a distance between 5 and 10 miles. Wow, which means that on an hour's flight, the balloon flies at spends between 5 to 10 miles an hour. That's not bad. But that's, again, you can't really cover much. But that's still 5 to 10 miles is pretty good. I think Tesla should look into that. Okay. I bet this event will be postponed yet another time. Musk's style of marketing. Musk says he's super focused on safety. Yes, I think there's a possibility that it does get pushed again. But hey, as Tesla investors, We know delays are coming. We've been trained for delays for years. What's another few weeks when we've waited for years? Am I right? So, any idea of the bond auction will not go well. So, let's come over to the calendar. And we've got the 10-year note auction, yes, at 1 p.m. So, last time, I think we got the 30-year, 20-year. The bid to cover ratio was still pretty strong, but the yields awarded were a little bit higher, well over 5%. So, markets got spooked a little bit back then. So, the 10-year note auction depends on the yield awarded as well as the bid to cover. Bid to cover tells you how strong the demand was. Yield awarded tells you the cost of financing for the U.S. government. Both of those very important metrics and can be a potential catalyst for the markets today as well. So something to obviously keep in mind. Dave says, someone went around the world, I'm telling you. Did someone actually go around the world in a hot air balloon? Is Dave right here? Or is he just fake news? Someone look it up. I'm curious now as well. SoFi shares if someone actually went around the world in a hot air balloon. Bertastic says this would take forever. They'd still be traveling. Was achieved in 1999 when Swiss Bertrand Piccard and British Brian Jones teamed up and broke the record. Checked out around the world in 80 days. But what does around the world even mean? Like you just literally pick a point and you just literally go west or east and you just like circle around and come back to the same point. Because you've also, well, but then, yeah. Interesting. What are we talking about here? Why are we so curious about this? Let's just focus on the markets. Any questions for me before I head off to our Discord? Let me know. More than happy to go over any options trades for you, analysis on individual stocks, share my thesis on anything. Started and finished in London. Okay, very cool. See, every day we learn something new. A Swiss team. No, they partnered up. A Swiss national, a British national, broke the record in 1999. Started from London, ended up in London. Hot air balloon. Great. You owe me a SoFi share. I'll pick up a lot of SoFi shares today. That's what I'll do. Would you hold a stock that you've gained 100% like my hood? Should I take my gain and put it into Tesla? So Raul, if you've got a really strong winner, the last thing you want to do is cut your winners too short. So you have to ask yourself if this is a long-term position, if you believe in Hood's long-term execution. And the answer is yes. Do not touch that position. So, you know, if you feel comfortable with what you have in Robinhood, and you don't feel like you're over allocated or you're kind of vulnerable to Robinhood's volatility to a point where it's actually affecting your portfolio a lot, then sure, you can trim some, you can, take some profit off the table, but just because you're up 100% is not the reason to sell and then reallocate. If the thesis is intact, if the company is executing, if the long-term investment plan is still intact, and you're comfortable with the position that you have, then sometimes the best thing to do is to do nothing. Surin, subscription is on a date-to-date. It's date-to-date. So whenever you join is when you're going to be charged again next month. So it's not calendar month, it's date-to-date. So every month you'll be charged on the same day. Any opportunities to deploy money, John? Well, that's the thing, right? There's a little bit of lack of opportunities given the risk reward's not that great right now and how much we've already moved up. So all right, everyone. So that's going to be it for today. Thank you so much for joining in. Cover calls on SoFi. We'll update everybody, Roshan, in the Discord. Which platform are we looking at? IBKR, so Interactive Brokers. I have that as well. It's pretty good. Next, resistance and target on Tesla, David, is going to be 361, 362 is what I have on the chart. So if you look at this, that's where we got rejected. A couple circles. So last couple times we got rejected there. And right now we're breaking above that level. So 326, 327 support. Resistance all the way up to as much as 360. Subscription, I will mention this in the Discord if you're interested in joining. So this is going to be how you can access Discord. So I'll share the link there. You can check it out over there. So thank you so much, everyone. Market opens in just over 20 minutes. We are pushing higher. Pre-market with Nvidia back over 145. Tesla's back over 335. And both QQQs and SPY also having a very strong start to the day. So thank you so much. Happy investing. Again, if you have any questions, we're more than happy to help. Link's going to be down below if you want to join our Discord, get real-time alerts and updates, as well as portfolio updates and MoneyVest website access as well. Happy investing. I'll see you all in the